Sam, looking good.
Hey, thanks, Aaron. How you doing?
Doing great. Let me change my name here. There we go.
Oh, you're not StandardDAO? There you go.
No, hopefully not. Hopefully this becomes more than just me.
Oh boy. So I figured I signed on a few minutes early, looking over the questions a little bit.
Yeah, and I mean, obviously those are just like rough. I think, what I'm more interested in doing with this is really understanding like your background, really, and how you came into this space, and then like a lot of like the things of why are you here now, and what about your counterparts, right? Why are they waiting, and what are you doing to help your counterparts come in, like stuff like that. And obviously at the end, what I want to do is also like plug the raise that we've done this so far, and if you want to participate, reach out. Like it is a private round, but this is a private call. That part won't be listed, but yeah.
Great. Cool. You know what I'm going to do? I'm going to shut down our market making for the next hour. So I'm not interrupted because we just got to fill, as you heard.
Oh my gosh, that would be quite stressful.
That would be epic. Like in the middle of the thing. Oh, by the way, I gotta go.
Yeah.
So, yeah, that's all good. Yeah, I mean, look, easy to answer all the questions. Definitely want to plug the raise. I want to, I think that, if it's okay with you, I will, I guess, disclose some of the advice that I gave on the advisory board call, and that I think that we're pricing a little too cheap.
Absolutely.
And kind of go from there. I mean, and obviously somebody should probably preface that by saying I'm not giving investment advice. But being that as may, I think I'd like to generate a lot more interest in the token and kind of move forward, because I do believe in it. And
yeah,
obviously I have the answers for those questions as well.
Yeah.
So
yeah, and that'll be good. Your experience when you were at FINRA, and the things that like were very unique to like your story. I think that'll be really interesting to hear in this.
Yeah, I mean, it's definitely been quite the journey. So
absolutely,
and I'm definitely having a lot of fun doing it. So yeah, that is the one thing that's every day is an adventure. It kind of goes back to the old days of floor trading, and this is about the closest thing to I guess the old days of floor trading that we're ever going to get again. So it's really cool to be involved, and I still think we're in early innings.
Yeah, no, definitely. And that kind of I think a lot of people, and we'll probably get to this part too, a lot of people are thinking that institutions are not even coming in right now or thinking about it, but really how exactly that is looking, which it's much different than what I think a lot of people know.
Yeah, I mean, I think it's much different than what people are saying, and I think a lot of people are saying for reasons. It's like you're going to hear me quote the famous "I'll give you 10 reasons why that's not going to work" phrase that I've heard in every single paradigm shift I've ever been in my career. Every time I propose a new idea, every time I've seen a change coming and said, "Oh, we've got to get on board and do this." Every time there have always been people saying, "Oh, I'll give you 10 reasons." That was the famous NYMEX saying, "I'll give you 10 reasons why that's not going to work, and this thing's going to go off a cliff." And that's all. And when you kind of get into psychology of people in markets, it's really about their fear of change, right? And I like to quote Dan Aykroyd from Spies Like Us. As you know, we mock what we don't understand. So he said it much better than that.
Yeah, so it looks like we're at the top of the hour. We have folks kind of streaming in here, and we should have a number of people within the next few minutes. So I think we'll just kind of put it on pause for maybe a couple minutes
Cool.
here and let people
Okay.
come in, and then we'll start this thing off.
My background's okay?
Yeah, background's totally fine. So.
Wait, Nika's gonna come in and move something.
See the famous Nika.
Oh, you want them to see the picture?
Nice.
Yeah, that's a young Sam with lots of hair and
Oh, Sam, you still got it.
yeah. Nice of you to say.
Sam, I'm not a nice guy, so this.
Oh my gosh, stop it.
Yeah, I think I'm probably less nice, so. You have to be, so that's just an unfortunate reality of the industry that we are in.
Okay, Jared, I think, we're recording. We got enough people in here. We can start it off. Do you want to launch us?
Let's get it going. Yeah. Welcome back, Sam Gaer. Happy to have you on the one-on-one AMA. For you in particular, you have one of the most, I believe, unique careers in finance so far, from being on the trading floor from, your young years, right? Into a body like FINRA on the committees of all kinds of regulatory organizations, and then now as a market maker in DeFi, right? In this part of your career. And I know that on the last call, we didn't really get to delve into your career as much as we would have liked to. And so I think, maybe starting off, and how the heck did you get on the trading floor that young anyways? And leveraging that into a whole career after,
Sure. So, first of all, Jared, Aaron, Standard, thank you for having me on and for doing this. I'm glad to be here for the next hour to talk about one of the easiest things that I can talk about myself. But all kidding aside, it's real. I'm really honored to be here. Honored to be involved in the project with a great team of advisors, great board. Just some of the smartest folks I've run into all the way around, from top of the organization to interns. Just really, you guys have put together a remarkable project. So congrats. So to now answer the question, how did I get onto the trading floor? When I was 15 years old, in suburban New Jersey, my dad was working on Wall Street. He's, we like to call my dad probably like the, one of the last Art Cash-ins of his time. If you've seen Art Cash-in on CNBC, you can picture that's my dad, right? The suspenders, the perfect hair, the whole 9 yards. And he was a stockbroker like forever. Back in the day, E.F. Hutton, Bear Stearns, and then Oppenheimer as of late. And way back in the 70s when he was at E.F. Hutton, he advised a co-worker of his to go down to this new place called the COMEX, where they were trading gold, and they were looking for people to essentially be brokers. And so this gentleman went down to the trading floor, founded an operation, and became one of the first floor brokers right as gold in the late 70s, early 80s was starting to become like the thing. To, I guess, pay back my dad, he offered my father's 15-year-old son, me, the ability to be a runner on the trading floor at the age of 15. At first, of course, I'm like, I'm not going to the city. Why would I ever do that? My dad's like, it pays $5 an hour cash. I'm like, and now in 1982, and I'm dating myself, in 1982, $5 an hour cash was like phenomenal. And I was just like, wow, I'm like, that's it. I've hit it, you know. So I get to the trading floor. I'm like 15 years old. I know nobody. I'm in my members only jacket, you know, like looking just like any one of these, you know, the true 80s era, 80s period films that you see. And for, I guess for, you know, for some scenic vision, the movie Trading Places, with everybody screaming and jumping and running and their hands moving, which is my hands move, was being filmed that summer on the COMEX floor. Actually, it was not. A little bit of history. It was filmed on the COMEX and not in the frozen concentrated orange juice pit. So you see it's in the gold pit. And about everybody in that movie were people that I was on the floor with way back when, and then even into my, you know, into my trading floor years when I was a trader on the floor. So, you know, so I got down there. I knew nobody, nothing. I walked in, you know, some, you know, very, you know, typically New York, you know, real, just like pushy, like, you know, crazy woman comes up to me and she's like, "Here, take this stack of orders over to the copper pit." I'm like, "Where's the copper pit? I don't know what you're talking about." And she's like, "I put a trading jacket on. You look like an idiot, right?" And so for the first summer, I'm like bumping around. I don't know where I'm going. You used to have to take these paper tickets. So I guess I'll go back. The process used to be that if you wanted to place an order on an exchange, you would call your broker on the telephone, no cell phones. And your broker would then write an order on a piece of paper and either call it in or call it down to what's called their wire room. Their wire room would then have a bunch of data entry clerks. They would type up the order. It would then go on a teletype, or they would call down to the trading floor on the phone. Somebody in a booth, there were lines and lines of booths, rows and rows of booths. Somebody in that booth would then pick up the phone or pick up the ticket off of the teletype machine, tear it. It would have carbon copies with carbon, you name it, right? And they would stack it and sort it as to which pit it needed to go to. You would then hand that order to a runner. The runner would take the order and go through these crowds of people with telephone wires that were constantly like strangling you, people banging into you, spitting on you, you know, writing on your jacket, and you kind of muscle your way through the crowd and, you know, say, you know, like wave the order at the guy who was the broker. They would grab it, usually curse at you a couple of times and tell you what an idiot you are. And then they would execute the order. And if it was a market order, you're supposed to wait, get the fill, and then do that whole thing and run back to the booth, whereby somebody would make a phone call or enter, and et cetera, et cetera. So you see that, I mean, that's kind of how it was. And by about the end of the first summer, I had taken over. A gentleman went on vacation, so he had these point and figure charts. Again, on a piece of graph paper, you would, every time that the market moved up a tick, you would put an O, and every time it moved down, you would put a little X in a tiny little box, and it would form these candles, which is how we have the candles that you see today on the exchanges. That's where those candlestick charts came from. And so over the next several summers, I went down to the trading floor. I did almost every job up to the point where I was like 19. I was a break clerk, meaning that there was another room on a floor below the exchange where everybody's trading cards, all the brokers' trading cards, would go down, and you would walk around to each of the brokers that the trades were written down on this pad. Each of the brokers had a representative. You would walk to their representative and say, you know, my broker knows buying 10 contracts at XYZ price. You know selling them? Yes, I know selling them. Great, I'm checking off that trade. And you used to check every trade manually. And then you would write them up on a sheet of paper and dump them into a basket at the exchange. And then the exchange would enter those contracts, and then those would go to the clearing firms. So you can see that it was a very it was a very manual process, but at the same time, what happened was you got to learn every aspect of the business. So by the time I was 19, 20 years old, I was basically running all the summer clerks for this particular gentleman, and then also at the same time really learning about trading and clearing and buys versus sells and how a trade is consummated and how the money flows from one firm to another, through the clearinghouse from one firm to another, et cetera, et cetera, et cetera. So that was my introduction. And then when I was about to graduate business school, I went to Wharton, and I was about to graduate, and I had a couple of really, kind of cool offers, which sometimes I look back on, I'm like, maybe, but yeah, as you could tell, I'm just not that type. The button down, type, although earlier in my career I was. So I had a couple of offers, a couple of investment banks and a trading firm in Chicago. I went down to the trading floor and I looked around and I'm like, I'm 21 years old. I have no responsibility. I don't have a family to support. This is the time to take risk. Again, being a trader, and having just the summer before that, I actually started trading using, and this is a whole another conversation which kind of folds in the technology piece of my career. I had started trading about the summer before, and I did very well. And I said, you know what, I'm going to do it. So sold my car, leased a seat, went down into the pit, and the rest was kind of history. In like 3 years, I built a nice little company, merged it with another one. We were doing a substantial amount of volume on the trading floor, and at 23 was when I did my first merger. So, but prior to that, the technology piece was kind of weaved in that my parents bought me an Apple II in 1982 or 83. And you had to essentially learn how to program to run the operating system, basic. And so I became a self-taught programmer. I took one of the only computer science courses in my high school at the time, and it was great. But it was like, it was truly like, if you like watched again some of those period movies, it's like really like the computer fair type of guys in the class. And here I was, an athlete, and just like, like kind of a little bit fish out of water, but also really good at math, understood programming, came very naturally. Went to Penn and Wharton, and took some computer science courses, but also then started saying, oh, so I can use statistics and I can program, and I can have this thing called, you used to have to dial into the mainframe. And I used to also have a modem that connected to CompuServe. And I used to be able to get prices for silver and gold and what have you. And I started doing regression analysis, and one thing led to another, and we started trading, and we started doing really well. So, and that's the beginnings of my career.
Very interesting. I think I take for granted the technology that I have today, where I can just go on like chartex.com, go to any indicator I want to look at, and it's all right there in front of you, like, or how to like even process a trade at that time. Like, was there an amount of human error involved at this? Like, did they mess up the trades at any point for people?
Oh, every day. There was, not only was there human error, there were times in that write-up room back in the day when there was like a secondary market, where it was like a market for error trades, if you can imagine. So yeah, so you used to learn how to kind of wheel and deal. Essentially, making sure that your broker was the most important thing that I learned was, you don't want to have a position. You can always write a check for an error, but you don't want to have a position. So you made sure no matter what, your broker was flat. And so, I'll take that one, you take those, I'll take these. And that's just kind of how things were, how things were done.
Yeah, and so when you sort of talked about, like, you have to take your lumps from everybody, I'm sure you mess up a trade, you're gonna get a little from a little bit of everyone, probably, some choice words, I guess.
Well, also remember, it wasn't just trading, Jared. This was a culture unto itself. So brokers used to, like, I never knew what an ATM machine was until I actually left the trading floor, because you never would go to an ATM machine. You would call up your clearing firm and say, I need X amount of cash at the end of the week. And they would come down with little envelopes of cash. The Brinks truck used to pull up to the exchange. They would come and they would come with little envelopes of cash. And here, you take the money out of your account like you would take money out of your bank account. Remember back then, everything was cash back then. And so you learn like life lessons as a runner because you get the cash envelope for your broker. And one day I happened to, the stupid kid that I happened to left the envelope on the desk, and of course the same woman who I told you about earlier, she saw me leave it and she wanted to teach me a lesson, so she swipes it off the desk, and I come back and there's no envelope, and I'm flipping out, and she's like, and she just whips out the envelope and she's like, don't, first New York City lesson, right? Don't leave this lying around. Now smarten up, right? Boom. Yeah, I mean, it wasn't just about, it was a very, very unique culture in that it wasn't just about trading. It was really just, it was also about, you would learn a lot of life lessons, just interacting with people.
For sure. And like, so what kind of like for you and your interests made you want to go into sort of like a quasi regulatory organization like FINRA from being, like a trader?
Sure. So in the early 90s, I befriended a gentleman who became the founder of Virtu. And he and I became, pretty good friends. And in 2002, I think it was, by 2002, I had left the trading floor. I had built a technology company, and we had many of the major regional exchanges as our clients, mostly in securities for market making, et cetera, and different kind of trade processing, software and hardware, et cetera. And I remember, it was a night where I just texted him out of the blue on one of the old Blackberries. I texted him out of the blue, and I'm like, I have what you need. And he's like, it's 8 o'clock at night, I remember, right? 8 p.m. He's like, where are you? I'm in my office. Get over here right now. So I happen to have been in my office as well, because I worked like that as well. I went over to his office and I showed him what, the technology that we have and why we have what they needed in terms of electronic trading, et cetera. And that was New York Mercantile Exchange. He was the chairman. And at that point in time, they ended up buying the assets of the company, and I became the CIO. Over the next several years, I walked into a real hornet's nest, if you will, of both politics and really bad technology. 7 different mainframe systems with 100 different consultants, crowding around them like, the Wizard of Oz, never mind the man behind the curtain. I can fix that. Don't worry about it. We'll just, and just like crazy stuff. And one of the hallmarks of what I did was I introduced a tremendous amount of transparency to technology process. We put screens up on every wall. We showed where projects were in terms of are they on time? Are they not on time? Just easily colored, green, yellow, red. We propagated a lot of change. We replatformed the exchange's system. We were running IT development teams 24/7. Really, really big technology replatform. Eventually, it worked really, really well. We saved the exchange a ton of money. We got it ready for electronic trading. We actually took back at one point in time our trading system from Chicago Mercantile Exchange and tripled the volumes on our platform, the platform that I sold to NYMEX, which was actually pretty gratifying myself. And then I became the CEO, and then I went to London for 2 years and became the CEO of NYMEX Europe, where I learned everything about London regulation that you want to know and what you don't want to know. Learned how to build an exchange essentially from the ground up, from everything from regulation to real estate to legal and culture, by the way, cultural differences, and so that kind of piqued my interest in potentially running an exchange, et cetera. Came back to New York. They made me the EVP, which not only oversaw all of technology but many other departments as well. We did the IPO and then an eventual merger with CME. During the merger, I had met a gentleman who was the president of New York Stock Exchange Reg. Later on, he became the CEO of FINRA. And I'm sitting at lunch one day and I got a call in 2010. Hey, I want to have lunch with you. It's, it's the CEO of FINRA. I want to have lunch with you. I'm like, so most of the time when you get that call, it's probably not a good thing. But I really, really like this gentleman a lot. We had a really good personal relationship. So I went to lunch with him. And a couple of months later, I became the CIO at FINRA. Another thing that I kind of stepped into and said, yeah, I don't know if this is going to work or not, but it was a really big challenge. Kind of the same theme. A lot of technology in disarray. They had a really big need to deliver some big projects because they had just signed some big regulatory contracts. And so once again, I was put in the position of having to deliver a lot of technology on a really, really tight budget and a really tight timeline. And so it was a really interesting challenge, both culturally and technologically. They, for example, never really had a true technology strategy. They had a technology budget, but it was basically like spend it all because they acted like the government. And so I tried to introduce, and it was actually one of the things that one of my mandates was to introduce some entrepreneurial spirit to the enterprise, which I think that we did. We started the beginnings of moving to AWS, which now FINRA is really way out ahead of the game. So and kudos to their CIO who took over after I left for moving the organization forward and kind of continuing what we had started. But ultimately, I just wanted to go and do my own thing. It was a great challenge. They didn't realize that they were processing they were one of the largest data processors in the world. They were processing about twice as many transactions on a daily basis as MasterCard, for example. They had a data footprint, one of the top 10 in the world, and you would mention names like Google and Facebook in the same breath as the size of their data stores. So we did some really interesting stuff. I learned a lot about regulation, but then I just, got to the point where I wanted to go out and do my own thing, and that's what I did.
Yeah. So Sam, I mean, it seemed like you, especially early mid-career, moved from a lot of different institutions, and you mentioned the culture fit. You even moved, cross country, globally. What was like your biggest challenge that you had to overcome whenever you came in at one of those large institutions and were setting the stage, especially on the technology front too?
So I was present for many changes, or what I call paradigm shifts in the industry. If you really kind of think about that, the story I just told you, everything from open outcry trading to electronic trading to algorithmic, regulation becoming much tighter and much more pervasive in the 2010s after Dodd-Frank, et cetera. And then the advent of crypto. The common theme that I've taken away from all of this has been as a change agent has been actually the common saying has been, I'll give you 10 reasons why this isn't going to work. Every time you come up, not even that you come up, but there's a change in the industry, you recognize that the winds are changing, that things are going to be different, that, hey, there might be a newer, better, more efficient, cheaper, you name it, way of doing things. The old guard, or people who have a lot to lose, are the first people, and this is the famous NYMEX saying, I'll give you 10 reasons why that's not going to work, right? No matter what you did, we introduced strips on the COMEX floor. I'll give you 10 reasons why that's not going to work. Electronic trading, not even like open electronic trading by membership only. I'll give you 10 reasons why that's not going to work. We introduced Clearport, which was Basically, the exchange kind of stepped in the wake of Enron going down, nobody being able to trade with each other bilaterally. The exchange innovated and created a new mechanism for essentially transferring risk from OTC contracts into and through the exchange clearinghouse. I'll give you 10 reasons why that's not going to work. 1,000 new contracts later, after they had only launched 12 in the prior 10 years, you kind of get used to people. The more people telling you that it can't be done, the more you want to get it done.
I do want to pivot ever so slightly to maybe some like market topics, but before we get over there, while we're still talking about FINRA, obviously as one of the most famous SROs in existence, and obviously crypto is at sort of a stage where maybe we are in need of a regulatory organization for our own. Do you think the crypto space as a whole fits itself into like one SRO? Because obviously Bitcoin has kind of been considered a commodity now, I think, by the CFTC, right? But I don't think that's all of the cryptos necessarily fit under that umbrella. And obviously there's 2 SROs for each of those organizations. Just picking your brain on that one.
Well, so that's a pretty broad topic with several questions embedded. So I think I'll try and pick them out one at a time. I think the first one would be the question of an industry SRO, and whether it's a couple of separate SROs or not. My opinion would be is to have a single SRO that is industry wide. My opinion would be to get out in front of it. And for those of you in the audience who don't know, an SRO is a self-regulatory organization. And so FINRA is a great example of a self-regulatory organization, as well as all of the futures exchanges have their own internal SRO, right, self-regulatory organization to kind of police the markets. And the reason why that's important, self-regulatory organization, the reason why that's important is it's kind of like the industry in securities, for example, and futures kind of stood up one day and said, well, we have 2 choices. The government's either going to come in and regulate us themselves, or we can regulate ourselves and then have the government regulate our regulator. And so I think it's really important for an industry to kind of get out in front of that, specifically an industry that wants to innovate and an industry that wants to expand. And so I think FINRA is a really, really good example of that. FINRA was created when NASDAQ, FINRA was NASDR, NASDAQ NASD regulation, right? So FINRA was created when NASDAQ went public, and one of the requirements that the SEC had was that you spin off the regulatory arm, you make that truly independent, and oh, by the way, you take some proceeds from the IPO to fund it. Now, why is that important? And why does FINRA stand out from other regulatory agencies? Is that they are, to a large extent, self-funded, even though the industry pays tax, if you will, to keep them going. Their capital base made them an independent organization. The nice part about it is that the industry recognized that, got together, and the organization is not only founded by, but also governed by the industry. So there are 25 people on the board, all members from the industry, but the organization itself operates on a relative independent basis. And that's really important. And if you really take a step back, the U.S. regulatory system, the financial markets are considered by and large the gold standard in the world. And nothing is perfect, and none are perfect, and none are ever going to be perfect. And people will always find a way around the system, right? They just will. However, I think it is probably one of the best examples of an industry getting together, figuring out how to police itself, and under the supervision of a government agency, namely the SEC. So I think that's really important, that for the crypto industry, specifically because you have such, it seems to be a very polarizing product, a very polarizing industry. And there are a lot of people in the quote unquote establishment who are very much against crypto doing anything and don't see value and don't see why it exists. I'll give you 10 reasons why it's not going to work. It's called a callback in comedy. And so I think it's super important with forces lining up against the industry that the industry steps forward, creates its own independent, funded regulatory agency that brings a ton of transparency to regulation. And I think the most important thing is echoing what makes FINRA kind of stand out from the rest is they go out and they say, we are for investor protection. We're not for the exchanges, even though the exchanges run them. We're not for the large banks and brokers, even though they're overrepresented, right? They devote a significant amount of time, energy, and transparency to investor protection. So much so that if you're in the industry, you may feel a little bit overregulated for that, but this is the price you pay to have to be part of the gold standard.
Yeah. You brought up a very interesting point where, I've had some curiosity around, like, so say we have an SRO for the crypto industry as a whole, which I feel like it's inevitable at some point. But so are we regulated by the SEC or the CFTC, or is, does this one body, who are they, looking up to, I guess?
Jared, I think that's the question of our time. Yeah, so I think that's that's why we do have some of the regulatory morass that we do have right now, in that nobody can decide who's actually regulating crypto. And I do think that while the current administration has taken a good step forward by issuing an executive order, if you will, to study this, I think there needs to be somebody who says, or maybe the two regulators get together and say, hey, you know what, we're going to spin off a separate regulator. That's fine too, but somebody needs to step up and say, number one, this is an asset class. Is it a security? Is it a future? Is it a commodity? Is it a currency? We don't know. Like all new innovations or innovative technologies, sometimes you break the mold. Sometimes you change the way things are done. Right? Here's to the crazy ones. And so ultimately, we just need some certainty and some clarity. And whether it's the CFTC or the SEC, I'm uncertain which one takes the prize. But I do think that we do need that clarity and certainty. I don't know how you go about doing it other than just doing it.
Yeah, absolutely. And obviously there's these reports that are commissioned by the president by the recent executive order. And so really, like, what's a timetable on when we even figure this out? Is this like a 5-year thing, like a 10-year thing?
Yeah, look, again, one of my frustrations with regulation is that, well, first of all, good regulation does take a long time because you don't want to rush in terms of forgetting things or ignoring facts, et cetera, which I'm sure if Dina was here, she would give her opinion about that one too. But I'll give you a great example. So one of the first things that I was on a big industry-wide phone call for at FINRA in 2010 was something called the Consolidated Audit Trail, the CAT. We heard of that? We probably not. You heard of the flash crash in 2010?
I did.
So after the flash crash in 2010, there was a lot of heat on the industry from both legislators and the public, and so the idea came to everyone and said, well, how come we can't track what every firm is doing in the marketplace? We have in futures, the futures markets can track what they're doing. in equities. Each exchange can track what each participant is doing. FINRA essentially gets a lot of information as well. But in options, nobody could put all the pieces together. So the CAT, Consolidated Audit Trail, was designed, or the idea was to have a central consolidated tape, if you will, of what everybody in the industry, or at least large traders, were doing.
Damn. Sounds like distributed ledger technology.
Yeah, well, hello. So it sounds pretty simple, right? And at a high level, it is pretty simple. But when you kind of drill down into the decades and decades of legacy technology infrastructure at every investment bank, every cutting edge investment bank, at every clearing firm, at every exchange, and at every regulator, it was a really, really, really big task. That being said, we're 10 years later, and I think they may have just rolled it out.
Wow.
An audit trail. And that's an audit trail, right? So, and a lot of that, and I'm not slighting anybody, but a lot of that had to do with a lot of politics, internal and external. A lot of it had to do with territorialism, and at the same time, the industry moved forward, and the industry doesn't stop innovating. And so, how do you implement this? Well, you implement it by making a decision, saying this is how it's going to be, and delivering a solution that the entire industry can live with. That solution was available. I lost track of what happened, except that it's 10 years later. So
that's kind of what we're looking at, but looking at this.
But yeah. Don't you think that's a problem, Jared and Aaron, right? Because in crypto we don't have 10 years. In crypto we don't have 2 years.
Well, if you're looking at the space today, there are obviously there are cash grabs. We have insecurities where you're having an exploit of $600 million or anything around the pipe there. But then you also have projects that are coming on board where they're building rails that streamline and create efficiencies, and they don't take 10 years to build, right? And if you look at DeFi today, there's so many different products out there that enable so many new technologies to come out, so much innovation. And these are kind of the things that aren't talked about enough, I would say. We hear too much about the bad things that are happening in the space, not enough about the good. I would assume that, especially Sam, I know you're in the DeFi space. You obviously are investing. You have a book. I think that's what has been your experience in DeFi, especially in your transition? And also, obviously, you run a book on centralized exchanges as well. Can you give us some clarity and some color on that?
Sure. Yeah, I mean, our experience has been, on the whole, it's been a positive experience. On the whole, the maturity that I've seen coming out of the industry, and DeFi in particular, in the past year, it is pretty remarkable. To go back to the point, look, the industry is going to continue to innovate, and so regulation is mostly reactive, right? It just is. There's almost never been a case where the regulators said, hey, I've got this great idea and we're going to be far out ahead of the curve because we see all these innovations happening in the industry. Regulators are always reactive. They're reacting to events happening in the industry and figuring out how to solve problems, basically. Look, it may be time to take a little bit of a proactive stance. It may be time to say, well, industry is innovating really at a really accelerated pace. There are some things in the industry that could potentially help us, that could essentially future-proof regulation. Maybe we ought to take a look at it. But you've got to walk before you run. We've got to see an SRO, and we've got to have, most importantly, you've got to have buy-in from the industry. You've got to have central exchange buy-in, and you have to have DeFi buy-in. You have to have major projects buying in to saying, well, yeah, the nature of DeFi is to essentially be decentralized, to not be regulated. But you do have to have some sort of vestige of at least the appearance, if you will, of fairness and transparency. And you coming out with your own audit and your own white paper, even if it is by a third party, who is the third party? Is it a recognized third party? Who's it recognized by? Who determines who is recognized? We don't know. And that these are part of the problems. I don't have the answer to them. I do know that they are some of the problems. I'd love to be able to help anybody who has an idea on that. I'm open to having that discussion. But going back to the experience has been by and large pretty good. And what I mean by pretty good is that people look at this industry as if it's a mature industry. This industry is far from mature, and when I say mature, I mean technologically. And so you have exchanges that were designed to be accessible by everyone. If you go to the traditional finance centralized exchanges, right? If you go to the to the CMEs and New York Stock Exchanges, et cetera, you can't get the type of access for free that anybody in this audience right now can get with free software, a free code editor, free source code, and all you need is an internet connection and a couple of bucks, and you can trade. That's never happened before in history. So so hats off to that, right? But by the same token, as more and more money is flowing into the space and more interest is flowing into the space institutionally as well as individually, but specifically institutionally, and large sums of money are being transacted on a daily basis. I'm just putting this out there. I think that the industry probably needs to spend a little bit less money on sports endorsements and some more money on improving its technology infrastructure and architecture. I'm just putting that one out there. That being said, obviously I do have some criticism of specifically exchange infrastructure and architecture, but look, it's so early right now. If you look back, I always call this is like 1999 ECNs and NASDAQ, and if for those of you out there who remember the SOS bandits and all of the and all of the technological development that's gone into the markets in the last 20 years. I mean, we're still measuring latency on exchanges, DeFi, and central in terms of milliseconds, sometimes hundreds of milliseconds. In the past year, that's tightened up dramatically. Now we have some exchanges that are looking to microsecond latency and co-location, et cetera. And while those are all bad words in terms of the free access for all, you're not gonna be able to stop that sort of progress because the technology already exists to make things faster. So things are going to get faster. Things are going to get better in terms of in terms of spreads, et cetera. If you look at spreads on ETH, for example. So in the past year, ETH has gone from, in the past year and a half or so since we've started trading, ETH has gone from something like 1,000 to 4,000. Now it's back in about 3,000, right? 2,800. It's a $2,800 asset where a year ago you were talking about sometimes $3, $4, $5 wide quotes. Right now, you can go onto any centralized exchange, and a $3,000 asset, you can get a penny wide quote for pretty much as you want to do. Maybe if you want to do a really large size, it'll be a couple of bucks. But if you go on to your Robinhood or your E-Trade account and you want to go and buy one share of Amazon, you're going to get a $5 market. And Amazon right now is $2,500, but it used to be over 3,000. So look, it's happening. The efficiency is coming to the market, the maturity is coming to the market, the interest is coming to the market. I do think that market operators need to respond with better and more better and more better technology.
Wait, so Sam, I mean, what you're saying right now is that the spreads are so tight in crypto. Is that liquidity? Is that it? And you're also saying that the technology nets isn't necessarily there to handle, you know, the flows that we're seeing in general stock exchange. So if it's not technology, then would that be liquidity? If it is liquidity, like what are the sources of liquidity that you're seeing coming into this market, and how long has that been happening?
Sure. So, well, first of all, it's not technology that's creating the tight markets, right? The tight markets are really coming from a lot of interest in the space. We have co-location space in Secaucus and London. We were just recently offered a premium on our colo space in Secaucus because folks are coming into the market and want to be co-located near Gemini, right? And that's not a plug for Gemini. I'm not, you know, I don't have a horse in that game, or dog in that race, you know, just in terms of who's coming into the space, we're seeing a lot of hedge funds. We're seeing a lot of proprietary trading firms, predominantly proprietary trading firms coming in as market makers on different exchanges. There's a ton of competition in terms of, you know, look what's going on in the stock market right now. People are hunting for yield. There are still opportunities in crypto, pretty much all over crypto, to generate yield if you're smart about it. So you have to get into the space. You know, now I have a nice little head start, but not as much of a head start as I would have liked. But you have to be in it to win it, as they say. And so folks are getting in, they're making markets, they're seeing what works, they're seeing what doesn't work. For the most part, you're seeing markets become more mature, more efficient, with more capital is flowing into the space. You know, take for example the interest that you saw at the recent at the SALT conference in the Bahamas, and now you're seeing one at Milken in California. So there's a ton of interest. Anybody out there who is calling this a, you know, this is a scam, this is, you know, this is gonna go away. Anybody who thinks that crypto is ephemeral, I think is going to be deemed to have been very mistaken in terms of their assumptions.
And so do you think that this sort of like interest in crypto from, you know, all across finance at this point, has it gotten bolstered by, I guess, the even traditional markets right now, how that's kind of like a mess? I saw Netflix looks like a crypto coin at this point, like how far down they are. And it reminds me, because obviously I track crypto more than traditional markets, but it seems like, you know, things are kind of starting to line up there.
Yeah, well, I think that's actually one of the problems, Jared. So one of the problems that we're having is that crypto has become a risk on, risk off asset. And so one of the reasons why I initially got into crypto was as this inflation hedge, gold replacement, you know, almost, you know, we were volatility traders, so almost a way to trade volatility. And what's happened is, because of the osmosis of people coming from traditional finance into crypto, people are using capital inflows and outflows in crypto the same way that they're using them in traditional finance. So all of a sudden, Bitcoin is now a risk on, risk off asset. Whereas a year and a half ago, it was actually, if you look at the correlation a year and a half ago to the NASDAQ and to the S&P versus where it is today, you'll see there's quite a difference.
Yeah, that's been one of my own also observations as well, is that it seems like we're getting more and more correlated over time. And I guess that is a byproduct of, obviously, you know, traditional finance folks getting more involved, right? You know, similar tastes from those folks for both markets, I guess.
Yeah, I mean, I think the problem with that is that then you kind of lose one of the investment theses for crypto, where crypto is, we've got limited supply, You don't have to worry about M1 and M2 money, you know, a lot of money being printed. You don't have to worry about, you're not worried really about interest rates. You're basically saying, hey, I'm in something that's going to be relatively stable for the long term. And unfortunately, or fortunately, depending on which side of the market you're on, it's not turned out to be that. At least it isn't yet.
And you did hit one of my other trigger words I was hoping to get into today as well, is the inflation, right? And so you were, on the trading floor, in the 80s, and obviously I think inflation was a thing, heavily back then, and people were worried about it. And here we are now, and obviously it's like one of the main topics of discussion, I think, on markets. Do you think they'll get a wrinkle on it? I mean, it seems like it's just kind of out of control at this point.
Yeah, I mean, look, what I say, it's always darkest before the dawn. I'm pretty optimistic as a whole. If you kind of understand what the reasons and rationale for inflation are, that was the same investment thesis that I had for wanting to buy Bitcoin at 7,000 in July of 2020, right? And the reason for that was that, wow, this is out of control. We're printing so much money. And that was 2020. And then, of course, after that, the markets hit new highs after new highs after new high. I'm talking about equities, new high after new high after new high. And you're sitting there saying, well, wow, I guess I was wrong. And now it turns out that, well, the chickens have come home to roost, so to speak. So, look, every economy is cyclical. We are in part of the cycle that people don't particularly enjoy right now, and this may be the beginning of that cycle. But I do think that there are a lot of mitigating factors to that. The first mitigating factor is that technology. Yes, technology is getting hit all over the place. If you miss earnings, you're getting crushed. I'm talking about equities now. If you miss earnings, you're getting crushed. You're looking at investments being written down. Well, that's part of the cycle, guys. That just is. But the core businesses of these of big tech I'm talking about, I think it's pretty solid. And I think that you saw that it was pretty solid during the pandemic. There was a really, really good case for investing in technology pretty much forever, but really during the pandemic, saying, wow, the world is going to always be reliant and more reliant and more reliant on technology. So that's also why segueing into crypto, it's also why I think crypto ultimately becomes a good investment. You're talking about technological advance, you're talking about technological change, you're talking about the guys out in Nebraska saying, I'll give you 10 reasons why this is going to work. And so every time that we hear people say that, every time that we see people say this is the end, every time that we hear people say, well, it's going to be a crypto winter. Well, it might be a crypto winter. Markets go up and down all the time. It's just a question of how you weather it. And it's a question of when and what's your timing and when you choose to invest. When everybody's telling you it's the end of the world, it's probably a good time to invest.
Sam, what was that aha moment for you to dive both feet into just crypto markets as a whole?
Yeah, so I was during the summer of 2020. I was sitting by the pool, and we were trading volatility. We were 100% volatility hedge fund, vol dispersion, VIX futures, the whole 9 yards. And it just hit me, like reading, I like to read a lot. And so it hit me as to how much money we were actually printing. In other words, we just gave away 25% of our annual GDP to folks by the way, not to be political, but it turns out that maybe more than 50% of that might have been fraudulent. But in terms of people. But anyway, it's something that we had to do. There's no disputing it as a country to make sure things kind of stayed on track. But wow, those were big numbers. And the magnitude of the number really hit me in terms of when you looked at the Fed balance sheet, when you looked at how much money had been printed in 1 quarter of 2020 versus the entire decade before. you started making the case of, well, this is just math, and where, what is out there that's limited in quantity, limited in supply, that makes a really, really good case for an alternative investment. And that's when, Bitcoin at first hit me, where I was just like, wow, okay, this makes a lot of sense. And I started reading up on it. It made a lot of sense. And we started investing in my PA, because our existing investors didn't want to invest in it. And it was just one of those aha moments. And I kept on pressing and pressing and pressing, until we finally kind of pulled the trigger and went full crypto.
Yeah, I love it. I mean, it's a amazing reason to get in. And the big question that I would have kind of to close it is, when do you think your counterparts would make that same decision, if they do? Like, are the majority of them currently doing that? And I think we kind of spoke to that a little bit, but like, when do you think that the majority of the market sees this as a very substantial market as well, and just another one?
Yeah, so I think that right now you're in terms of the adoption cycle, you're probably at a point right now where there are very few people who are the true crypto doubters, right? That it's going away, it's not here to stay, it's a fad. Especially in the industry, in hedge funds and investment management. I think that if you go around the investment management, trading, speculator community, I don't think you'll find too many doubters. I do think that a significant number of people are entering the space on a daily/weekly basis. We see it coming from Chicago and New York all the time. You see it happening, as I mentioned, in spreads, in the on the centralized exchanges and on the DeFis, and we see it happening in terms of latency, of order entry and response latency and times. Those are starting to come down as well. So the industry is starting to mimic traditional finance in those respects. I think that you would probably have to search for a while to find any of my colleagues or my peers who are not at least crypto curious, who are not at least really, really interested. And I think then that group kind of falls into two categories. One who is like, I've got to get into it. And the other is like, well, I want to get into it, but I don't really know how. I don't know how to trade. There's a lot of risk there. I'll give you 10 reasons why it's not going to work, right? And so that's just part of the adoption cycle. I think that a year from now, if you want a prediction, I think a year from now there probably won't be a hedge fund or they will be in the real minority, if they exist, that is not trading crypto.
Yeah, no, I would mirror that. And it seems to, from what we see, because we are onboarding, hundreds of new people every day to the DAO, and whether they have knowledge of it or not, it's the same sentiment of, young people that are looking to get involved, participate, learn about this space so that they can grow their skills and be at that next cusp of the next, trend in technology. And the shift there, to plug something that we do have going on right now that we don't have, won't have for very long. We do have a pre-sale going on, and if anyone would like to participate in that, please reach out to myself, my email, or my LinkedIn account. And I would like to give Sam, I appreciate you coming on board, not only as an advisor, but having this call. We're at the top of the hour, but if you have anything that you'd like to, shameless plug about anything that you have going on, for everyone here, please, feel free. The room is yours.
Oh, thank you. I don't have a shameless plug. I'm not kind of about like that sort of self-promotion. But I do have a plug in terms of Standard and the raise that you're doing. I actually confided to Aaron that I would probably disclose this in terms of in terms of my conversation with the advisory board meeting, I guess was 2 weeks ago. I do think we priced a little bit too low, but that's just me. So shameless plug. This is one of the few projects that we are truly behind in terms of not just mouth but money, and we are really we're really invested in this in a number of ways. I think it's in terms of DeFi, a very unique proposition. You have a DeFi token backed with real assets that are standardized, hence the name, and it really does represent an opportunity, in my opinion. Again, not investment advice. So the regulator in me is going to come out. I'm not giving investment advice. Do your own research. All of the other disclaimers, past performance, yada yada yada. But look, at the end of the day, I just want to thank you guys for having me on. I do appreciate having the time to chat about this stuff. I do, as you can tell, enjoy chatting about this stuff. So thanks again. I look forward to more in the future.
Absolutely. And Sam, before we go, next 5 years, where are you going to be?
Where am I going to be?
Absolutely.
Tell me where Bitcoin is next year, and I'll let you know. But yeah, no, you know where I'm going to be, Aaron? I'm going to be right here. I really enjoy doing this. I don't want to go out on a golf course and play golf all day. I do enjoy doing this. I enjoy building. I enjoy being involved in things where I can contribute knowledge and know-how, and continue to build some of the great organizations and be involved with great organizations.
I love it. Perfect. And we'll be right here too. So
Plan.
we love the same thing. So yeah, thanks everyone for joining. Thanks Sam for joining, Jared. This has been great, and we'll have the clips up within the week, and this was a great one. Thanks guys.
Thank you so much, everyone.
I appreciate it. Thanks everybody for joining.
Bye guys.